So welcome again to another further discussion. It's another Friday, 7:30, and I'm drinking Coke mixed with vodka, Kenyan vodka called Kibao. Good. So that's the introduction, and that's what we have. Um, so if you're on Instagram, you can find out the link to the blog about what I'm talking about today on the in our bio. And if you're meeting up on Zoom or you're watching this on YouTube, you can find the link to the blog in the comments or in the description, and also in the chat. And today we're going to speak about we're going to take a look at the bigger picture of money, and this kind of involves looking at all the systems that come together to make what we understand today as the concept of money. And we're trying to look at the overall picture so that we can decide or understand what money is. This is all in an attempt of understanding governance, and money being one of the best tools to apply governance. So we need to understand money, and also with us being in the what is it, the 21st or 22nd century, 21st century. So with us being in the 21st century and going into things like digital currencies, it's good to understand money, because very soon we're going to be in this world where we have specific monies for specific things. And if you do not understand money and how it works, at that point you're going to only be like a user of money rather than someone who understands and someone who willingly participates in the money picture or in the money system. So today I'm going to take you through the big picture of money, and this in order to do that, we're going to look at a few entities that kind of work together to define what money today is. And once we look at these entities, we'll be able to further understand what money is and how we can kind of manipulate it or work with it so that we can have good results in the end. And are they taking questions at the end? I'll try and keep this super short, super simple. And if you have any questions, feel free to interrupt me, post a question on Zoom or on YouTube or on Instagram, wherever you're watching this from. Thank you. So I'm going to start. So money as we use it, like whatever country you're watching this from, money as we use it is a system that is constantly kind of bending and forging and forming new ways of being. So it basically, money is an agreement. Long-term agreements that last thousands and thousands of years are agreements that constantly change. You have to amend them. It's like a constitution. You can't have the constitution that you had 200 years ago. That's not the constitution you have for your country right now. You have a constitution that you amended 2 years ago, that you probably amended 6 months ago, and you'll keep amending. You'll probably amend this constitution as we go along. So money also is the same thing, because money is an agreement. It's an agreement that is morphing, that is changing, that is kind of going everywhere. Okay, so there's a couple of entities that enable money to do what it does. But when I say do what it does, I mean change the way it does and kind of like do morph and fit society, is it? In the last, I think, so in the last, since say the 70s or the 80s, we can see, we can start seeing how a lot of sovereign powers being companies, big companies, multinational companies, big individuals, and big countries, or rather all countries are sovereign powers. So we can't see a lot of sovereign powers starting to be influenced and almost policed by foreign companies, foreign exchange markets. Case in point is you can a very simple place we can look, or a very good place close to home that we can look is um, what would I say? Zimbabwe. Zimbabwe is one country that is almost externally governed because the whole country's government is almost unable to govern. But then, because the rest of the world has power over the dollar, they kind of manage to dictate what happens inside Zimbabwe. So there's this power shift that we're seeing a lot of sovereign bodies being affected or being controlled by I'd say foreign exchange markets. It depends on how much money do you have to exchange for another currency. And this money you have that you want to exchange for another currency, which you do need to do as a sovereign power, because you can't buy things in America. Like Kenya as a government needs to go and buy things in America, but you can't buy things in America with Kenyan shillings. So you need dollars. In a way, you need to get the foreign currency. And if other people control and dictate how you get foreign currency and use it, then they almost have a power over you to be able to kind of control. And we can observe this by, if you understand a concept called capital flight. What is capital flight? Capital flight is when suddenly, well, not suddenly, it could be gradually, but the general situation of money that belongs to a country moving away from the country. Say citizens of Kenya start removing their money from Kenya and taking it to the UK, or they're taking it to Zimbabwe, or they're taking it to New Zealand, just because for some reason. This would be called capital flight. And so this is something that affects how much power governments have and how much they can do. And because it does affect those things, because it does affect those powers, we can look at it as a part of the bigger picture of money. The way money moves around the world. When money moves around the world, it means it's leaving someplace and it's going someplace. Good. The way money moves around the world is one of the elements that is involved in making money. Because if a lot of dollars go into a country, then that country suddenly becomes more valuable. If a lot of dollars leave, it could be any currency. I'm just using dollars because a lot of people know about dollars. If a lot of dollars leave a country, then that country becomes less valuable. And so capital flight becomes one of the parts of the bigger picture of money. The way money moves around dictates the value of money and the power of the holder, the power of the person holding the money. And it's actually really good to have money moving around rather than, so say you have a country of Wakanda, and then you had all these Wakanda coins, but no one is spending Wakanda coins, which means no one wants Wakanda coins, or no one is giving Wakanda coins. All the Wakanda coins that you have become useless. You do want some sort of capital flight going on so that you can have an exchange going on. And then the next part of money as a bigger picture is volatility of currency. A lot of people will be familiar with currency volatility right now because of what happens to Bitcoin and what happens to Ethereum and all this digital cryptocurrencies. Their full name is cryptographic currency. Cryptographic because computer scientists have used cryptography, which is the art or the science of hiding a message hiding our message in a message. So I can give you like a word, but to you it look like a word, but to someone else it could be a word that means something. So that's basically what cryptography is. And with cryptography, we've managed to build digital currencies that cannot be copied from my computer to your computer. And it's digital currencies could have existed for the last maybe 30 years, but the thing that made them 30 years, 30 years is when 1990, okay, 40 years, um, but they sort of started existing really properly in 2010. And the reason for that, the reason for, the reason for that is that uh, they computer scientists still hadn't figured out a way to make sure that I can't copy a coin from one computer to the other. And with cryptography, which is the science of hiding a message in a message, we can figure out a way of making sure that one coin exists in one way or another. But then I digress. I was speaking about the volatility of currency. This is a big part of money. A big part of money is how quickly it adds value or loses value. So if volatility is basically how quickly the value of your money or anything that you have changes, as how quickly that value changes. And if that value changes quickly, you have high volatility. And if that value changes slowly, you have a low volatility. I'll give you an example. So, and we can measure volatility by comparing the value of one currency against all the other currencies. In the 1960s, there was an agreement called the Bretton Woods Agreement. This is basically the agreement that set $1 to be equal to some amount of gold. Wait. Yeah. And at the time, most currency, if let's say you had a market then when the agreement was, and you had a market that was a value of 60 billion, or maybe 600 units of anything. You have a market value, a market whose value was 600. When we say the market value is 600, we mean all the money that exchanges hands in that market totals to 600. And let's say 5% of most of the people exchanging the money took like a negative view. They had a feeling, they had an intuition that the value of the currency would be lower than it is. What happens then is they would start selling their currency at a lower rate than what the value is. And this, what happens is we would end up having how would I say? So we would end up having more money. If you had 5 shillings yesterday, and then suddenly today your 5 shillings, it's 10 shillings. That's not necessarily a good thing, because the way currencies are built today, we depend on currency. To you is only valuable to you because someone else doesn't have it. Now, if suddenly someone else has a lot, then the currency you have suddenly devalues. If suddenly everyone had 1 million, then like houses will become expensive. Why? Because now everyone has it. It's too common. It's everywhere. And this is because our today's economy is built on scarcity. This is something we'll tackle further down along the line. It's kind of where we end up. This is the ultimate conclusion we get for this, that economies are not supposed to be built around scarcity. Rather, they're supposed to be built around abundance. But right now, most economies, if not all, are built around scarcity. And so this now we go into a place where like the changing the perception of others. So if I have an avocado and people think it's expensive, that's good for me. But if I have an avocado and people don't think it's very expensive, or people think it's not expensive, then it's bad for me. This is volatility. Volatility also plays a part in the definition of money. And by the end of this, we'll want to look at we want to understand money in such a way that we can understand what a cryptocurrency is. That's where we're going. And then uh, after volatility, we have something called stability or instability. The stability or instability is basically what systems do you have in place to make sure yesterday's value of your currency is today's value of your currency. And this could be usually, today what we have is a central bank, and not many central banks. Most countries, some countries don't have a central bank, but most countries have a central bank, and the central bank will decide when to release extra amounts of cash or to hold back extra amounts of cash. And this releasing of cash is basically, they just print money out of thin air. They just print money. And this is going to affect they do that in order to stabilize the value of the currency. Remember, we just spoke about volatility, and we spoke about volatility in such a way that if I had 10 today, and then suddenly my 10 was not worth 20, but it was, and suddenly my 10 was 20, then that means all my ones have been split into two, which means my one is worth half what it was yesterday, you see? And the job of central banks today is to kind of make sure that we go in such a level where the money doesn't be too unstable. You don't want it to be too unstable, but you also don't want it to be too stable. You want to give it a bit of leeway so that it can play. It's like suspension. You can push it down, you can put it up, push it down, put it up. And that really helps, because it helps in some aspects, and in some aspects it doesn't. It helps because it ensures that business goes on. If money was always the same, or was always valued the same at the same point, then business would kind of cease to exist at some point, because then there would be no need to get more money or less money. But if money's value keeps changing, then that means people's motivations, people's wants, and people's needs keep changing too. And that would mean more activity inside an economy. And more activity inside an economy is basically the definition of money. You know, if people do a lot in your economy, then there's a lot of money in your economy. If people don't do a lot, then there's not a lot of money in the economy. And this is stuff that is affected by stability and instability. You want your currencies to be moderately unstable, but then you also want them to be moderately stable, you know, so that people can. You do want some sort of trading, you know. If money stayed at the same level, then there would be no need to trade. And if there's no need to trade, then there would be no need for money, because we'd all just go outside and eat a banana and come back home. Well, I don't know if home would exist without money, but let's see. So in preceding meetings, we talked about who is in charge of your money and what is money. And we at some point we spoke about your savings, basically the currency that you're holding. And this is also a part of the money system, okay? How much you're holding, the concept of how much you're holding or how much you're stashing aside is also a part of it's also a part of the bigger picture of money. And it's like, okay, I'll give you an example. Let's say we all understand that the value of your money is determined by like this global betting scheme where a lot of more than 90% of the bets are basically speculative. Basically, a lot of people buy a lot of people buy dollars because they think dollars are going to be more expensive tomorrow. Flat, you see? So 90% of the people getting dollars don't get dollars because they want to use them. They get dollars because they think dollars are going to be expensive tomorrow. And okay, so I'm trying to get you to a point where you see how the money you're holding is part of a bigger system of money. So the future of the money you're holding, say you have 1 million shillings saved in a bank, will very, very, very tightly depend on how volatile your currency shillings are. If they're very volatile, it could either climb value very a lot, or it could drop value a lot. There's many ways of looking at it. So it can drop value a lot, or it can it can drop value a lot, or it can add value a lot. So it depends on what it really does depend on what your currency does. So the money that you're holding in the bank also affects the overall money in such. Think about it this way. If a lot of people are holding a lot of money, then a lot of people are very confident in your money. Then that means the value of your money is also going to climb. You see? There's another point. So everyone is involved in global finance, directly or indirectly. If you consume anything, if you eat food and you sleep in a bed, you're involved in the global finance. Like, because you're choosing something, you always choose something. You choose like to eat a meal, you choose to sleep on a certain mattress, you choose to wear a certain trouser. It depends on anything, but almost everything you do, even going to church, is involved in global finance. Basically, whenever you use money in any form, you basically play in global finance. Well, not just money, value. If you exchange value, or accept value, or give away value, you play in global finance. And even if you feel like you don't have savings, or you don't have any money, say you have zero shillings right now, and no savings and no sort of assets, which is, by the way, okay. There's no problem in not having. Even if you do not have like that, you're still vested in global finance, because whatever happens with global finance, still one way or another affects your life. There's no way of escaping global finance. Like, there's butterfly effects, things that happen in very disparate parts of the world kind of come back and affect you one way or another. And ultimately, what I want you to see is that money is trust, which lives and dies in human hearts and minds. Like, having a note, or having like a shilling or a coin or a dollar or a pound means nothing if you don't trust in it. And ultimately, money is it's us who decide what money is. It's what we trust in, and it is what we believe in. And what we trust in and believe, in order to trust and believe in something, you need a human, and you need the human to trust and believe. So I don't know if this shows you, money is just trust that lives in humans. And now, which takes me to the next point. A lot of people are asking me last week, what is cryptocurrency? How does it work? Cryptocurrency is just money that is kept and used on a computer. And what is money? Money is trust and belief. Trust and belief, which lives in people's hearts and minds. Basically, what I'm trying to explain here is cryptocurrencies, Bitcoin, Ethereum, EOS, Dogecoin. There's 1,000. I could name many, and most people would never heard of them. And it's okay to not have heard of them. Ultimately, currencies are trust that lives in people, that lives in people's minds and hearts. So you have to start thinking about money as trust. And the things you see, the things you spend, is just a representation of your trust. If you give someone 1,000 shillings, you're asking them to trust that the note you're giving to them holds value. And if they do accept it, they're telling you they trust in that note. Which means if I give someone one Bitcoin and they accept the Bitcoin, it's the same thing. It could be $1, it could be a Bitcoin. It's the same thing. It's just trust. I have to trust in it. And whoever is giving it to me has to trust in it. So money, all sorts of money. It could be stones, it could be sticks, it could be cloth. It's all trust. Money never works without trust, and it doesn't exist without trust. Money systems, including the ones that we are in right now, they are all mechanisms and systems that are built to make sure that that trust stays alive. And you can think about it like, it's not easy to get a shilling or $1 or a Bitcoin. Why? Because it's not easy to get someone's trust. That makes sense. It's not easy to get someone's trust. You have to really prove yourself if you want someone to trust you. You really have to do your best. You have to like show why, show how, show where, show what, so that people can trust you. So it's not easy to make trust, to get people to trust you. And if we come to it, the more we go into this, we'll realize that entire civilizations, entire nations, entire worlds, entire universes have been built on trust. It is the core. It is everything that like if you have a village or you have a group, that village needs to trust in itself. And once that village or that town or that city trusts, or that country trusts in itself, then they can grow really rapidly. How do we show trust? It's by money. You see? So if you have a village, and if you have a village or you're a country, you have Kenya, and we want Kenya to grow, that means we want the Kenyan shilling to grow. And that starts by telling the Kenyan to trust in the shilling. And once people outside Kenya can see that Kenyans trust in the shilling, then they can trust in the shilling. That's why everyone really believes in America, because America is the biggest marketing scheme in the world. We are all made to believe like America, the American dream, is like the biggest thing we can go for. Which is like ultimate freedom, ultimate getting there. This is exactly what I need to go for. But what is it? They are all telling us that they trust in the dollar and we should trust in the dollar. In fact, they've told us that they trust in the dollar so much that we trust in the dollar right now. That's why the dollar is a de facto global currency. This also has like negative repercussions. Once a society starts losing confidence in itself and its money, then the rest of the world also starts losing confidence in that society and that society's money. And so you can see they're both related. If Kenyans believe in the shilling a lot, then other people outside will start believing in the shilling, because a lot of people trust Kenyans. De facto, they trust something that Kenyans trust. If Kenyans don't believe in the shilling, then a lot of people who trust Kenyans will know that these people don't trust their shilling, and they'll not believe in it, you see. Fixing money isn't about all the fancy words. I've used a lot of fancy words. I've used cryptocurrency. I've used central banks, inflation, volatility. It's not all about that. Fixing money is about building the kind of society in which money is meant to operate. If you design your society well enough, then you can give them a cryptocurrency to use. And money is about building societies that trust in themselves and that aspire to be trusted in. And this also brings me to the final answer. I think I can see Janet is in the call. She was asking last week, what is a cryptocurrency? Or can you explain more about a cryptocurrency? It's human trust and human belief encoded and stored in a computer. And right now, we are used to physical money, which is human trust and human belief, put on a note of paper. The representation of the trust and of the belief is insignificant. What we need to know is that it's just the trust um, that needs that is requisite for all of this. No. So yeah, thank you. Yeah. So Josephine brought us food, which it's Nyamachoma, the other farm, and Trusty Josephine brought us food. Thank you so much. She's gone, but exactly. I just stopped. I just finished explaining what money is and how we can kind of arrive at it being trust, human trust, and human belief. And I think that's most of my talk for today. I'm really keen and willing to take on any questions and explain anything that has been confusing. I'm sure I've used a lot of big words, and because money is so connected within itself, I'm sure I've like referenced a lot of things that I'm referencing, and I know that can be confusing. So I'm willing to answer any question that anyone has on the bigger picture of money being the central banks, currency volatility, currency stability, and your savings. So anyone, any questions? Wow, no questions? We cannot have no questions. Do we have no questions there?
Zach?
No, I didn't. Yeah.
Yeah, I think we can probably go to Janet or Vincent. The people who had the questions last time. I don't know whether you've managed to capture the questions they had last time,
I mean,
whether you,
the questions they had last time were more about like explaining more about cryptocurrencies. And what the talk we did today explains what a currency is. And a cryptocurrency is just, not just, is a currency that lives and dies within a computer. And the reason for that is it's cryptographic. And cryptographic is basically the art of putting a message in a message. It's hiding a message in a message. It's hiding a message so other people, unintended people, cannot see it. I think there's a question from somewhere there.
So Gravity AF is asking, you mentioned governments making money out of nothing.
Yes.
Is this a bad thing?
It's yes, because it's unsustainable. Think about how much money can be made out of nothing. Think about it. A lot of money, it's unlimited money can be made out of nothing. Realistically, we want our money to represent real value, not just anything, you know. You do want your shilling to mean something, you know. And if governments can make money out of nothing, then if governments can make money out of nothing, then that means that we basically the power of having almost falls to the government because they can just decide to have more money, which is so it's in some ways it's a good thing because then like if you can establish trust, then you can establish money, which is what all the kids are doing with Bitcoin and everything. But then in most ways, in the context as it's applied today, it's a very not good thing because a lot of people do not have the power of deciding to issue their monies. So it's not a very good thing. Okay. Any other question? I guess we can go to Janet or Vincent from last week if they have questions. I know Vincent had just got here and I can recap some of the stuff if need be. Okay. I can see you're unmuted. Yeah?
Hello.
Yes.
Hi, everybody.
Yeah. Good to have you.
Can you hear me?
Yes, we can. Yes, we can hear you.
Okay. Yeah, good. I may not have any question today, but I think I'm very fascinated in the way you articulate issues of money, giving it a whole new meaning. And I think with the interest that I'm having on this, you called it computer money in crypto.
Computer money. Yeah, it's computer money. Yes, that's
computer
it.
money.
We can call it that. That fixes a lot of problems for a lot of people. Just call it computer money, not crypto. I like that.
Yeah, but one thing that I've always wondered that was almost coming very clear today is that why crypto? Why was it?
Okay, good.
So, is it out of? Is it out of those the codes or something? Those computer things that encoding and decoding until it becomes something that you can call money, something that you can use to purchase something, to own a property. I don't know.
Okay, no, it's not the code that needed to become better or different for this to happen. Computer money has been needed for a long time. Think about this. All the other monies can be censored. Okay. What do I mean when I say all the other monies can be censored? Your government can tell your bank to not give you your money. You see?
Yes.
So there's always been a need, and a lot of times, hopefully, more than not, most of the time when the government says that you shouldn't get your money, you're a bad person. But at some point, sometimes you're not a bad person, and your government still has power over your livelihood, and your government is your servant, which is not cool because they're supposed to serve you, but they can change. They can basically affect your life the way they want. So there's always been a need for money that cannot be censored. Where does cryptocurrency come in? Cryptocurrency is money. Where does computer money come in, as we've named it today? Computer money is money that can be shared between a person with another person without intermediaries. For me to send you a shilling or a dollar or a pound, I have to involve whichever government. Like if I want to send you a shilling, if I owe Janet a shilling and I want to send her a shilling, then I have to involve my government by way of tax. I have to pay taxes for that transaction. No, there's no other way. So I have to involve my government or the shilling government in that money. And this gives them an opportunity to censor. They can silence, they can silence, and they can encourage whomever they deem fit. So there's always been a need for money that cannot be censored. However, we've not always had the technology to make money that cannot be censored. And for the last 30 years, computer scientists and mathematicians have been trying to find a way to prove that a person is a person. Why? If I can prove a person is a person, then I can prove that person X gave person Y something, which means I do not need person W to be the person to be the intermediary, to be the intermediary. So if I do not need Y to be the intermediary, Y being your government, Y being anyone that can tax you, prevent your transaction from going through, or encourage your transaction from going through. It goes both ways. So there's always been a need for having censor-proof currencies, and computers have given this to us by enabling us to prove that we are ourselves and enabling us to connect directly to each other without any other intermediary being involved. So that's suddenly why. And the suddenly why just happened in 2009 when someone called Satoshi Nakamoto, we don't know if that's their real name or not, but it happened when they developed some mathematics that had been being developed since 1980s. Somewhere, I think I might be wrong, but somewhere close to 86, 80, 85 there. But people had been working on mathematics to prove that someone is someone. And if I can prove that someone is someone, I can prove that person X gave person Y something, which makes me not need person A to be the recorder and the intermediary and the dispute solver. You see, because if I can prove you're you, then we can exchange, and we can always go back and see the exchange always happen. I wonder if that makes sense to you. Does it make sense on why cryptocurrencies are being made all of a sudden?
Yeah. It does, and I think it's clearly demonstrates or clarifies why governments are issuing yes.
True.
Like the CBK, for instance, has always been there in the news. Don't do this, don't do cryptocurrency, it is illegal. If you lose your money, nobody is going to help you. You know,
exactly.
Now, my question at this moment, that one is very clear. My question at this moment is, what's the level of the risks that have been involved in dealing cryptocurrency?
Okay. So, It depends on the community you build, because remember, as I finished speaking, I said, fixing money is not about all the fancy words, crypto, inflation, deflation, central banks. It's not about that. It's about the kind of society in which money is meant to operate. So you can make your money riskier or less riskier by designing the society that uses that money. Okay, that's one point. However, there's a lot of people who take advantage of a lot of things. They'll take advantage of people not knowing. They take advantage of people not having, and a lack of information today is almost an assault to a being. Like, if you do not have information today, you probably will get hurt, physically or not. You will get hurt because you do not have access to this information. And people use that a lot to make cryptocurrencies seem like something they're not. And this in turn endangers people who do not know enough about cryptocurrencies. And it's not a lot to know. You don't need, like right now, you don't need to know how to make a shilling, to use a shilling, or to understand a shilling. You understand the shilling. It's the same thing about Bitcoin. You don't need to know how to make a Bitcoin to use a Bitcoin, but you do kind of need to know how it works and where it works and where it does not. So there's the normal con schemes. People just confidence tricking you and be like, okay, if you give me this money by tomorrow, it will have grown by this value and I'll give you this money. This happened a lot. This happened with the ostrich feathers in the 1920s. Ostrich feathers happened in 1920, yeah, something around that. And this happened with the tulip flower. There was also called the tulip bubble. Basically, people believe that the value of the tulip flower will always grow, and a lot of people bought tulips, and it just didn't happen. It's a bubble, and this will always happen. Cryptocurrencies, computers came. We had the .com bubble. Everyone just made a website and became a billionaire, and then it all failed. Cryptocurrencies came, everyone just made up cryptocurrency, became a billionaire, and then it failed. So there's all this, there's the normal con schemes, which can be very varied, which are risky. And then there's like the other like normal risks, which come from what kind of society you build. So it could seem dangerous to use cryptocurrency, but if you take the time to understand it and know how to use it, it's not that dangerous. Think about it like this. Your parents spent a lot of time teaching you how to use the normal money you have right now. You don't have that with cryptocurrency. That's why it's difficult to spend. But your parents spent a lot of time. They told you, if you go to the shop and something is 56 shillings and you give them 60 shillings, expect 4 shillings back and ask for it because it's yours. They told you that. Your parents taught you that. They spent a lot of time teaching you how to use your normal currency. And what is lacking today is that a lot of people maybe don't know how to use cryptocurrency. And that kind of makes it dangerous by other people taking advantage of people not knowing how to use them. Does that make sense? I'm hoping that makes sense. She's quiet. We can go to another question. Oh, she's back.
Yeah, Zach, it's clear. It's clear now. I get, but I guess every day is something new you learn.
Mhm.
The more you listen, the more you know, the more you understand. I think today I've got a much clearer image of the computer money.
Yeah, that's good.
Simply put.
Yeah.
Yep.
Yeah. Floor is open to any more questions. Anyone?
Hi, I have a question.
Yes.
So you said money is trust.
Mm-hmm.
So my question is mainly on the volatility.
Mm-hmm.
What depends? What affects how much money is worth? Like you mentioned, like today you have a certain amount of money, tomorrow you have this amount. Yeah, what really? Yeah, that's my question.
So the amount of money you have is affected by stability and instability. And the amount of money is affected by stability and instability because your central bank tries to play a game. They try and make your money almost flat. And then you have other players, external players, people outside your country try and make your money less value. And you inside your country try and make your money more value. So what affects how much money you have in terms of instability and stability is how much money the central bank prints, if I might say so. If you go to Zimbabwe right now, people get paid millions, but you couldn't buy one mandazi with millions in Zimbabwe. So you could have a lot of money, but it could not mean much, you see. And then if you go to like London right now, you can spend £1 and probably get like 2 days worth of food, you see. You could have $1 million in Zimbabwe and not get one bread, and then you could have £1 in London and get 2 days worth of food. Why? Because the central bank in Zimbabwe is just due to many circumstances. There's many circumstances, but the central bank is printing more Zimbabwe dollars. But the central bank in the UK is not printing more pounds. So that £1 holds its value way more than 1 million Zimbabwean shillings or dollars. Does that make sense, Royce?
Yeah, it does. It's sort of what you mentioned about suspension, right?
Suspension. How suspension? Yeah. It goes up and down. It kind of like plays with. It's like springs. Like you press the spring, it becomes shorter. You release the spring, it becomes longer. And so your central bank is trying to keep your spring at a certain height. You, as a person who is very valuable, is trying to make your spring longer. And people outside, okay, actually, if you think about it, you're trying to make your spring shorter because you want less of your money to mean more. But people outside your country are trying to make their money mean more. And their money mean more means your money meaning less. It's really confusing because it's trust. It's how much we trust each other, and it's how much we trade trust. That's what makes it so confusing, because depending on how much we trade trust, then how much trust, that also depends on how much money we have and how much we can give away and take it. Does it make sense?
Yeah, sure. Thank you.
Yeah, can I ask something on that note?
Yes.
Who determines this suspension? Isn't it the market forces? Is it individuals? I mean, do we just wake up and decide our money, we want it to be more valuable than the Zimbabwean money? Or is it just determined by the financial and market forces? Is it artificial, or it's just
both
default?
artificial and organic.
Okay.
It's both artificial. It's organic in that the more you believe in a shilling, the more the shilling will be valuable. You know, if every one of us went today to the market and went like, I'm not paying more than 1 shilling for a tomato, it would hold because that's market forces. There's nowhere else to sell tomatoes. You have to sell them here. It would hold. But then this also becomes affected because other countries also do things that affect our country, which means other countries also affect our money. And by affecting our money, other countries force our central bank to release more money into the economy or try and take away money from the economy. And when they release more money into the economy, regardless of how much you tried to make 1 shilling value 1 shilling, there's still many shillings out there. So no one cares. You know, it only matters if the central bank doesn't do their thing. But if the central bank does do their thing, then it affects how much. So it's organic in that if you trust money and you use the money, then you kind of build the value. But also it's also determined by someone, maybe the governor of the central bank, but that doesn't sound right. It should be like a committee of 1,000 people. I'd want like a committee of 10,000 people thinking about my money. I don't want one person thinking about my money, the way I think about it. But it could also be that committee deciding that we need to release 1 million more shillings into the economy so that X can happen or Y can happen. It's trust. Remember, it's trust. It's a relationship. It's unreasonable. By its own nature, it's just unreasonable. It's a game you have to play. You have to kind of balance it. I wonder if that makes sense to that question, Janet.
It does, Zach. Thanks.
Okay, awesome. Do any more questions? This is good.
I
This
think
is becoming a really good conversation.
Hi, Zach.
Hi.
Sorry, I joined in late. I was handling a few issues here and there. I may have missed quite a chunk of the discussion, but I think I'm going to catch up in other avenues and ways of doing the same. Now, yeah. I wanted to just throw in some view or just a question that guys keep getting every time. On the universality and acceptability of the crypto, and then 2 things to do with free flow. For example, if I move from wherever I am here right now in Kenya and I go to, let's say, Britain, or I go to Australia, you just see visa accepted here.
Yes.
How widespread will that crypto accepted here be seen? So, because that for me would be like the great advertising point and acceptability and universality. I'm just curious on how that is going to be worked out and how that is going to be spread out, because this third party or tier, the guy who comes to regulate, person W, remember your XYW guy, that W, it needs not to come in at every particular point, but when I see my visa accepted here, automatically my currency, there are those interbank and foreign exchange losses and gains. It is calculated there and then you get your value and go. I don't know how this crypto will be tied to such a thing. I'm just speaking on behalf of those guys who are still having lots of questions about the same. because we want it so simple, so easy to use, the way we've been taught to use money. Bitcoin accepted here, full stop. There's an ATM or something like that.
Yeah,
So
I know.
you don't need just to be tied to one particular thing. I hope I'm clear.
Yeah, you are very clear. And first of all, I'll say thank you so much. Thank you so much for showing up, even if late. It better late than never. They say that. I didn't say that. And also, I think Duncan is going to organize like a YouTube video of all the talks that we do, so that if you missed like the beginning parts, you can always catch up on that. It'll be on YouTube. There'll be a recording. I can see right now there's a recording of it. Another thing. So I have a weird experience, but I don't know if it might be not the one you have. But from my experience, I've seen that cryptocurrency looks like it's accepted in more places than Visa. From my experience, maybe I walk the streets that accept more cryptocurrency, and this is because for Visa to be accepted, for conventional non-computer currencies to be accepted, a third party has to be involved. But for cryptocurrencies to be accepted, thinking about it the real way, there is no way of a third party approving or disapproving a cryptocurrency. That's why if there was, then your central bank would be like, there's no cryptocurrency in Kenya, flat out, no. But what is happening right now is it's peer-to-peer. So what you might be experiencing right now, or a lot of people might be experiencing right now, Vincent, is that it feels like cryptocurrency isn't widely accepted, but what is actually happening is that we haven't taken it upon ourselves to convince our friends, our family, our relatives to use cryptocurrency. Because remember, cryptocurrency is peer-to-peer, person to person, one-to-one. It's not like a group of people saying like, okay, now we accept cryptocurrency. Like one shop out of 1,000 could choose to accept cryptocurrency. So with cryptocurrency being peer-to-peer, I wonder if you can see that it is already universal. Because as long as you can always speak to the person on the other side of the agreement and be like, do you accept Bitcoin? And they can go like, what is Bitcoin? And if you can explain it well enough to them and they like, okay, that makes sense, you can pay me in that, then you can achieve universality. So again, it's like the thing Janet asked. It's both organic and inorganic, but especially the acceptability is more organic because it really depends on us going out and showing our friends, family, foes, and relatives how to use it and how it's safer and how it's better and how it's a bit more better for the universe as a whole. And in like virtually at the moment, I would say cryptocurrency is accepted everywhere across the world, as long as you can get the receiver and the receiver and the sender to agree on it, because that's the only hurdle. It's just the person who's taking it and the person who's giving it. Besides that, cryptocurrency is already universal. We don't need organizations. We don't need work. We don't need people. Maybe we need more groups like ours right now discussing what cryptocurrency is at a very like non-technical level, like at a very like normal people, normal day level. Maybe that's what we need to achieve more universality. But in it being universal, it already is. If I would say
Okay.
that.
Yes, just another small observation tied to the universality is the fact that the perception that this crypto is a bit quote unquote elitist. That my grandmother, for example, in Budalangi, how would she accept this money from the guys from town? Remember, there was a time in Kenya we had this Bangla Pesa. I don't know if you heard about. You remember something like that?
That's
see,
actually made by a friend of ours, so we are very interested in that.
Yeah, good. I'm looking at it and tying it to crypto because I just want to tie it down to the commonest of the common guys down there, so that they don't look at crypto as new age and these techno savvy guys always just looking at screens and things like that with headphones and just talking to themselves. No, it should just go to be so normal that some lady somewhere in Gishagi and some high-flying corporate guy, they can agree on it, as opposed to being seen as something just a section of guys are using it. Comment on that.
So, Color's my assistant, and also like my fiance has gone to get me a note of money, and I want to try and answer your question. So, cryptocurrencies are not. You don't need a computer really. It's funny because yes, I know it's computer money. I know, but if actually you go a bit deeper than that, it's actually mathematics money, which means all you need is a pen and paper. I mean, you shouldn't need to do all the mathematics. That should be left to other people. But at the end of the day, all you need is a serial number. And you can always accept serial numbers from anyone. And I want to show you, I think I have my wallet with me. And I think I have a 1,000 shilling note in here. If I can show it on the screen, there's a number. There's a number running down the note. It's a serial number. And I'm lucky enough to have sent Janet cryptocurrency, and I think also Rose and Carlos here. What all those transactions have always had in common is a serial number. And even if we're looking right now at a physical Kenyan currency, it does have a serial number. So grandma in the village can accept cryptocurrency as long as she can write down a serial number. It really becomes as simple as that. Like this whole note just represents this number. All this else doesn't matter. It just represents this serial number. This is what matters. And as long as someone can write that down, they can accept cryptocurrency. They can have cryptocurrency. They can use cryptocurrency, because the next time they need to use it, they just use the serial number. They give away the serial number. They go to this serial number and take 5, take 10, take 6, take 15. And that's basically the structure of cryptocurrency, or the universality, or the thing, or the killer app. The moment we can get everyone, or as many people, literate enough to be able to accept a serial number and know that this serial number belongs to me, this number belongs to me and it's mine alone, then we've achieved universality, and we've achieved, like, someone can have, it's like, think about M-Pesa. You can have a smartphone, you can have a laptop, you can have a Kabambe, which is like a 500 shilling, $50 phone. You can still use M-Pesa. And the reason M-Pesa works is, I'll show you again. The reason M-Pesa works is because if you look at any M-Pesa transaction also, like, let me try and, okay, I can do this. If you look at any M-Pesa transaction also, it also, I'm trying to get a transaction so that I can show it on the video. It's fine. If you look at any M-Pesa transaction, just like the note that I've shown you before, you will notice that it starts with a serial number. It always starts with a serial number. So all currencies, every currency, M-Pesa, money, cryptocurrency, it's all just a serial number. As long as you can write down the serial number that belongs to you, and you can give away the serial number that belongs to someone else, it works. So I wonder if that answers your question on how the high-tech person from like the town can deal with someone from the village. All we need is to achieve literacy. And then that's it. If someone can understand numbers and like this number belongs to me or this word belongs to me, that's it. We've achieved like, it doesn't have to be someone like me in front of a computer with headphones on.
No, that bit is understood. My concern was just the bit that you talked about now, that you have to get used to the numbers and the serial numbers, and in the common money as we understand it, I don't even have to know any serial number. I only need to know the color and sometimes just the texture and the feel and at least the size. I know this is a 500. I don't know if I pick your 500 and I return another 500 to you. You won't start checking the serial number.
Yeah, you would. Yeah, that's true. That's very true.
That's the bit I'm trying to figure out how we are going to go around it for those not so literate masses. Because when you say you have to get be cognizant of the fact that there's a serial number attached, there is some literature attached. That is something to work around, and let us look at how to deal with that as well.
I hear you.
I think.
Yeah.
I think I agree with what Vincent is trying to say, and maybe it's not all about just the serial number. Is there a way whereby all this cryptocurrency issue can be demystified and what language now? Break it into bits, such that it is going to be accessible to my dad who is at home, who you see, like M-Pesa, it has been decrypted in such a way that you can just go and use your ID, your identification, and that will be able to, and then you don't even have to show the message. You just need to be able to maybe go to the M-Pesa menu and then be literate enough to withdraw. And then at your mind, you have the PIN, which is just a 4-digit number. And with that, and then with the regular use, then you know that you can just do this and you will get your money. You may be conned once or twice, but at least you know how it works. In that when you go wrong, you know this is where I went wrong. So at this level, if I understand what Vincent is saying, is that there are too many complexities around trading cryptocurrency. It is like for the elite. But if it could be demystified, broken down into bits, now this is where like people like Zach and Dan can come in, whereby you break it into bits and then you lower it into that level whereby the currency is going to be universal. Anybody can use it, anybody can get their money without necessarily going through the tariffs of the government. I think that the breaking down into bits until it is accessible to this common man at home. I think.
That's really good. I'm really happy that the both of you brought us to this and not me. This is why we're having this discussion. Like, this is the reason we're having this discussion, because we need us as a group now. We have the technical people who can build the currency and who can use it, who can make it be used. But us as a technical group right now, or rather us as a work group right now, need to, this is a question this group was formed for. we need to find out, how do we make this normal? How do we make this in such a way that it's used by everyone? And that's why this group is not just a bunch of engineers or a bunch of like CEOs or a bunch of anyone. It's a group of everyone who almost is involved in money. And this is what we're trying to figure out. Vincent's question, how do we make this? Now, we've all accepted it, we've all accepted it exists, it's good, we want to use it. Now, Vincent asked a very important question. How do we make everyone be able to use this is what we need to determine. Once we can determine that, we basically have a solution on our hands. That's really what we need to be. That's why we have this group. We need to all discuss. We need to all come up with like suggestions and proposals to kind of find out, how do we make this usable by everyone? That's why this group exists. That's the best answer I can give to that question.
Okay. Zach, like you alluded to, is that we need to come up with solutions. Thing was simply to jog our memories, and it's sort of a rhetorical question, because I always ask myself, how will I break this down to XYZ and the masses I meet every time in the course of my day-to-day activities? Because I may understand it, and now that is at the back of my mind. I always ask myself, how am I going to make this knowledge so easily available, demystified? Like someone says, if you can't explain it to a 6-year-old,
Yeah.
you sure don't know about it.
True.
That is at the back of my mind. So I was just throwing it as a challenge to us so that we look at it. Thanks.
I think it's a good challenge to have. And I think Duncan knows that it's a good challenge to have. I'm sure Duncan was already aware that this is what we're doing. That's what he's been pushing for. And I think as we go along, we can try and push the discussions in such a way that we are all contributing in a way of like finding a way of getting this new thing that we've discovered. We've basically discovered like a little cure or like a little experimental cure. But how do we make it available for the masses is basically the question. Because now I feel confident enough in saying that the people who are in this meeting understand what cryptocurrency means and why. And why would we have meetings like this? Why would we talk about money like this? Why would we even think about money like this? Yeah. So because we're thinking about money like this and we're talking about money like this, I think it's upon us to make a few experiments. Perhaps this is really good, but this is actually a really good juncture to be at, because now we can start as a group making experiments based on members' feedback and taking them out there and seeing how people respond to them, and then coming back and being like, people responding like this to this, people responding like that to that, we should do this, we should do that. I think we've almost really very well timely hit that question. And like, I can't thank Vincent anymore for like really introducing that question at this point, because now we all have to go back, and now it has to stop being Zach talking, and it needs to become Vincent or Janet or Duncan or Rose or Lance speaking and saying, hey, perhaps we could do this, perhaps we could do that, perhaps we could do this. There is no defined way of taking this to the masses is our problem. We need to define a way and find a way of taking this to the masses. That's basically our problem. We've figured out the technology bits. We have the cryptocurrency, we can build it. We figured out why. We know why, we know where, we know how, we know when. We can do that. What we need to figure out right now as a group, or not right now, as we go along as a group, is how do we take this to the masses? And then once we figure out the first step and we experiment, we're going to come back with the results and go back again and go back again and go back again. And then in a few months, few years, however long it takes, we will find a solution. But one thing I do want to mention is, especially with what is happening in the world right now, we really are at the cusp. Changes are coming. There is a new world order being built right now. And it's our choice whether we get involved in this new world order being built or we just be victims of it. And what we are trying all as a group right now to try and be involved constructively in this new world order so that we can make our step, we can make our foot, we can say, us as Africans need this and we should get this, please, you know? So I think that's a good thing. We should all go out and kind of think about this and see how to achieve this and come back next week. We'll probably, I'll announce a topic next week. We'll probably think about like a few solutions. I can talk to everyone in this group, like on the sidebar, and try and garner like ideas and such. And then we can present those next week and kind of drill down on those until we have a solid point where we go like, okay, let's take this to this group of people. That's why we started with a Chama group of people, because Chamas deal in cash. And we wanted to help people who deal with cash. So we can design a solution, take it out there, see how those people reply to it, come back, reiterate, keep doing that until we figure out a way of making this acceptable for everyone. It could be by phone, it could be by pen and paper, it could be by printing notes, it doesn't matter. Bangladesh did it by printing notes. Bitcoin did it by sending emails. There's like all the things in between those are solutions, and we could have any of them. It all depends on how we design the society that uses and owns that currency. This is the best I can say. Anyone else? Any remarks, any feelings, any new things, anything someone has learned that is super interesting? Okay.
Okay.
Mhm.
Sorry, Shazak.
Okay.
From my side, I think I'm left with like a food for thought from Vincent's question and the conversation in general, and I'm really looking forward to hear thoughts around this. And I mean, also from my side, because I know I'll be trying to dig in deeper and bring like questions to the audience to try and break it down bit by bit. I wouldn't say I'm so good at Bitcoin. I've never even bought one, but I know how it works. Yeah, the reason why I've not ventured, I think it's because of the volatility. Yeah, but I'm really looking forward to hear the detailed discussions around this in the coming meeting and also within the coming week as well. Yep. Zach, you're muted.
Sorry, I'm speaking while me. Awesome. Thank you so much, Duncan. And I guess if no one has any remarks or any questions, then I'd like to close this meeting with Vincent's question. I'd like us all to think about, how do we take this to the masses? It's a serial number. It could be on a note, it could be on a coin, it could be on an email. But how do we make this acceptable by 99% of Africans? I'd like us to think about this. I'm also going to think about it a lot. And I know the onus falls on me to do the presentation next week. But if any one of you, I'll try and speak to everyone. We also have the group. We can speak a lot about this. But if anyone has any ideas on how we can do this, please suggest them. And even if you suggest it as a topic for me to speak, it's fine. I'll work with you and I'll make a talk based on it and I'll come and speak it. But if you can make a talk, I'm sure Duncan and I can organize so that you present. And it's good that this question came out of not me or Duncan, so that it's owned by the community. And I want us to all go out of this meeting owning this question, thinking about, how do we take this new thing, this solution to the world's problems right now, to the masses? And I think if we can think about this for the next week and come back together on it, I really think we can come up with enough good ideas to be able to move forward with it. Yeah. Other than that, I'd like to thank each and every one of you for making time once again on a Friday evening to get to us and get to speaking about money and mathematics and computers and crypto, all this boring stuff. You could be out there having a beer, but you're here talking about money and thinking about life and like doing service in service of your community. And I'd like to thank each and every one of you for coming and being here while I talk every weekend. Thank you so much. And it's been an awesome talk this week too. See you next week.
Thank you. You should have bought us all a beer for that.
Thank you, guys. Thank you, guys.
How did I know someone would say that? How did I know? Well, how did I know it would be you?
Okay, guys. Thank you. Good night.
For those who are lacking, Janet is actually my mother. So thank you. Bye, everyone.
Have a good
Okay,
weekend.
Bye.